7:30 7:15 हाँ 7:15 ਤੇ 7:30
Guys, we are officially starting. Let's go. Let's see how this starts.
This liberal quickly folded under Charlie Kirk's common sense.
Do you feel proud of yourself? Do you think that's a little bit? I am a voter.
And then a professor turning up for you to ridiculous on your campus. How does that make you feel? That's not comedy.
This liberal quickly.
Proud of yourself. Do you think that's a little bit? I am a voter.
And then a professor turning up for you to ridiculous on your campus. How does that make you feel? That's not comedy.
This liberal quickly.
Yo, welcome guys to another analysis of cryptocurrency. Today is 9th of September and it's actually a launch event of Apple 17 Pro Max all. So let's cover our yesterday's and today's move that has been already made. What are the analysis behind them? So पहली upper routine की करनी है हमेशा. The first routine of your day analysis, how to start it. Like never people no very less people know like how to read charts, analyze them. What is the correct way to analyze it? So always go to a higher time frame first. It's like a day or a week because it will give you a direction bias. So let's say that's a weekly candle. So this week you can say starting from this month from first, the Bitcoin is reversing. See, it went all the way to the high, down, and still going up. So what it will tell you this, it means it is reversing, but the price is dropping from that top. So we will go to a day time frame now. Let's say this one. All high. This is the trend for the day, and this is weekly. Weekly and day, and let's go again to the smaller time frame. So what the day time frame will tell you is price is moving between a resistance and a support, because see how many time it rejected from the resistance. Actually, it's an order block, so I will tell you again right after it. But for the meantime, it's just, let's say, the bias. So let's go with the 4 hours time frame. Now things are getting more clear, because you can now clearly see I have marked over. This is a blue, where you can say is a rectangle. So I have marked the bearish order block in here, because see how many time like the price has been rejected from this area. One, two, three, you can say it four. Uh, Again the five. Five time the price has been rejected from the same area. So it's becoming a resistance. Let's go to the smaller time frame. Let's say 1 hour. Again, you can see the resistance over here, but we also have a support. It's a mitigation order block. Price go up all the way to the down and fail to take move from here, because it was all rejected, and then again drop off, again go up, and then consolidation and go down. So from here it took support here as well. Let's go to the 15-minute time frame. Now I will tell you, like, in here I marked the order block. It's a bearish order block. It rejected for the first time. It covers how many amount it covers. Just wait a second. It went all the way to the almost $3,000. So the 9 bars, it took 2 hours and 15 minutes. So It take a resistance from here after going to the consolidation area. Look at this, how price is reacting in this area, because consolidation area is just say a no trade zone. Because if you take trades in this zone, it will be all like you're hitting your stop loss, you're hunting yourself. Again, price get back to the zone where I already marked the bearish order block, and then see how price reacted here. Again, it drops down. Again, it pulls back, but again, price flushed down because there has been a already a mitigate. Sorry, what we can say is bearish order block. Always watch out the volume and the price. How volume reacts with the price, or price react with the volume, vice versa. Because if you can see, when the price is dropping, the volume is increasing from here. See how much the red bars have been already increased than the previous green bars. So you guys can see the like real difference between it. Let's move to the Ethereum. Ethereum does the same thing. It goes back again, rejected from the fair value gap. It's a bearish fair value gap. I will tell you what is fair value gap. The distance that has not been covered by the candles, or it's skipped because the order flow was so much to the downside or the upside. So what you are gonna do to identify fair value gap, we also like consider it as FVG. I write it here. You guys can say FVNG, fair value gap. So how you gonna mark it? First, take the first candle over here and take the third candle over here. If you guys can see, look at this area. Let's say, uh, yeah, let's see this example first. Because in here, it could be a fair value gap, but it is why? Because the first candle goes all the way down to this one, and the third candle, it was bearish, it was good, but the third candle cover the rest of the area below the first one, and the next candle goes up to this and fully fill the gap between first and the third candle that already has been formed. So if you see gap in here, look at the gap from first candle and the third candle. In between the gap, this is a fair value gap. So if it is red, it means a bearish. If it is green, it means bullish. So what you are gonna do is, let me erase that. Is mark that level and see how the price reacts to that level. Look at this one. Price break from the lower area of our fair value gap, but again rejected. Price again become resistance from the area that has already been marked by our fair value gap, the lower. Price again consolidated to this zone, and yeah, in here as well. Look, and then price successfully breaks that with a good candle. So it means there were a good buying pressure in between this one, but it fails to break over our fair value gap high. So our fair value gap is still valid. Then price again took resistance from the order block and then form a new high with a good candle, but again rejected. So it means a fair value gap is still here. Again rejected, again consolidated to the zone and respected our fair value gap low. Again, it react down from the fair value gap. And this one is a order block, bullish order block from how to identify a bullish order block. If you guys can see how many times the price has been respected that zone and went to the top. See, I will count with you. 1, 2, 3, even though we can say this one because it will touch the top, and this one. Look how the price has been going up from the same zone. So it's a called order block. So this one is Ethereum, and it all going down. I actually started streaming late because uh, because of some reason. So these momentums can easily be catch while the high volume. So high volume would be the starting of the Tokyo session. It start from here. Oh, sorry. It start from this one. New York session. Sorry, the New York session. Look at this. Look at this. How New York session react to Ethereum. Because I don't know, like gold is going up and up because China is China is like attacking the gold and increasing the price again and again. I don't know why. Because they see the gold as a real asset, not the Bitcoin. Because Bitcoin would be easily like bearish. There, all I can say. And let's take a look on gold. Yesterday, I already marked a parallel lines. You can mark it from here. If you guys are using this uh, channel, like channel, or we can say the trading view platform. So it's a parallel channel that will tell you the price is going up and down from within the zone, within the reach. So look at the price, how it reacted. Just make sure to mark a good and proper. Like take the first one and the second one. I'll tell you how to mark it. It's a parallel channel. Start from the very bottom. From here till here. And then start placing it accurately like this. Make sure you touch all the, like, from where are you starting? Make sure to you guys touch from the top of the wick as well. Include wick as well, because it is also a, like, a price that has been already there but already been rejected. And I marked the from, oh sorry, from wick is here as well. And now just adjust the channel. Look at this, it's so simple. So what you're gonna do is identify the price moving in between the area. So as I marked so much from here, I'll tell you, because I was trading it yesterday. So this is a bearish order block from here. Look at the price that has already been respected this zone. Look, 1, 2. And when it breaks with a good green volume. It opens from here. So just take a look. It's a 15-minute chart. So it starts from here and closes here. Again, it comes back and touch the bottom. You can see this one. This, I think this one is a liquidity sweep from the both side. So the gold is preparing a good move. I highlight with you. This area, the wick, it's a liquidity grab, and this one is also a liquidity grab. So I think the gold is preparing something bigger move. This one is a bullish order block. So I will write it down here. It's a bull order block. Or we can just delete it. I think the Apple event has been already started. Yeah.
Important features like heart rate notifications, fall detection, and crash detection. SE3 adds even
So this was a quick review from the yesterday and today. This is forming also a very short block from here. In this time, like when I start the live stream, it usually go to the consolidated zone because they have like less volume. These stocks, I mean, the cryptocurrency has less volume during this one. It will start again on when the New York session would be closed and the Tokyo session, what we can say Asian. So Tokyo session will start. It will again grow up. It will like around 3 or around 7. But I would say for the Ethereum, it will not go down, or else it can go up to here to grab the liquidity or the orders. But this is a, let's see the trend. So look at the trend. This is a day time frame. It always start and go up to the high. The wicks that includes in here, these one, the lines that you can see on top of the body. What the hell is going on? On the top of the body and the bottom, it is called wicks. People we call shadow. So in this area, the price already been there, but rejected from the area and it closes to this one. It closes back. It means price started from this area. That that would be the opening for this green candle. Just say it's $4,297. It goes all the way to the up till here, $4,489. But it rejected back during the 24 hours. So it closes down to 403.08. And then look at the price. It's already been rejected and stay on that level. So the trend is mostly a bearish because it's making a higher high, higher low, again lower high. If this break to this one, so it will make a lower high. But if you can see from the week, it would be a bullish trend. See, from a week, it's a bullish trend, but it fails to close down this area like this candle. So it making a higher high and higher low. That's all. So always remember trading is risky. Do your own research and then trade. We can take trade till here. Like it would be a good trade for the long position, starting from here to this level. Stop loss would be this. If it breaks and close down from this order block, close above this order block, then we can think upon it because that would be a scalping, a short trade. Let's see the point of control for the yesterday. Look how the point of control has been like support by the price. This line is called POC, point of control, where the last session has a high probability and high bids and ask. What you can say is high selling and buying. Okay, so for today, that's enough. I'm getting late for my work as well. We will see you guys tomorrow. Tomorrow I will try to like take all the scenario from starting of New York session. So that's all from my side today. I will be guys seeing you tomorrow at the same or early time. Thanks for watching.